Thank you for tuning in to another edition of the Vulcan Report. We're looking at a chart of the S&P 500. As you can see, today was a down day for stock indexes across the board. However, we still remain in this strong bullish up phase, as you can see here. Today we have a swing VIX reading of 41.73, which is overbought. Normally when we hit a plus 40 reading or greater on the pulse scan swing VIX indicator, it signals that the market is overbought and could be preparing for a reversal. The market pulse is positive since it's trading above its zero signal line. The pulse scan crossed below the swing VIX, creating a downtrend channel as of today's trading session. This means that negative momentum has entered the market. I expect sideways to lower prices within the next 3 to 5 days. One thing to note is that a buy or sell signal is generated when the swing VIX moves out of an overbought or oversold area. Our momentum readings suggest that we are still very bullish with heavy accumulation of the equity market. As far as the trend strength reading, it is also very strong. Excuse me, our trend line retracement. The close is currently above its post-wave cycle trend line retracement reading of 1547.38. Excuse me. So in futures, we'll say that's about 1547.25. All right, so that's a long ways down, but that's where the long-term trend line retracement area is. Currently, we're also trading above our long-term trend line of 1579.61. So we have a long way toward back down that this market can sustain as far as correction and still be very bullish. Looking at intraday price projections for Thursday, we have intraday resistance at 1755.5, and we have our intraday support at 1733.75. Okay, our monthly price projections, if all things being equal, if this strong market continues, the next 12 to 18 months price target will be 2168.75. That's incredible. However, if we begin to correct, we have support at 1547 and we'll say 1/4. All right, so that's where we are right now. As for volatility, we closed below the upper band by 11.1%. One thing to note here is that the cumulo cloud is starting to rise. So as the cumulo cloud begins to rise, prices begin to come back down here. All right, we have strong support around the 1710 level. Okay, that's where strong support is right now for this last breakout. So I expect prices to come back down to that 1710 level and hang out for quite some time. So right now we're very bullish. We're overbought though, but we are locked in. Okay, the upward trend is strong and it is locked in. So we could take out this previous high here that we hit on Tuesday very easy with very little effort still. But we're not out of the woods. Usually when you see a straight up extension like this, a correction is almost imminent. Prices like to get back and trade along this blue line here and this red line here. The blue line right now is around 1742.5. That's what that's going to suggest, and that's pretty much where the market closed yesterday. But then we got to get back down to around 1713, I would say 1713 and 1697. So that's going to be a support zone, 1713.75 to 1697.25. That's our immediate support zone, and I expect for that to actually begin to manifest itself a little bit more powerfully in the days to come. but that's where we are right now. So this red support line is going to be crucial. It's going to be critical. This is where we're going to head, okay, in the S&P 500. So that support, and like I said, that support is going to be around the, I want to say, the 1697 and a quarter level. All right, so that's 42 points away. So we could trade sideways and consolidate a bit, and also pull back towards this price point. So you want to keep a lookout for that. All right, moving right along here. Okay, the next chart is of the Russell. Notice how the Russell is now consolidating in this area here after topping out, after spiking on the top out. I would have to say that on this one, you could say that a hammer, that's what it looks like, a hammer is occurring, and the hammer has a long lower shadow and it closed near the high. Hammers must appear after a significant decline or when prices are oversold in order for it to be valid. When this occurs, it usually indicates the formation of a support level and is thus considered a bullish pattern. So we have to take that into account. However, also analyzing these past few days of data, we have a hanging man. And a hanging man has a very long lower shadow and a small real body. This pattern can be bullish or bearish, depending on the trend. If it occurs during an uptrend, which appears to be the case here, obviously, it is called a hanging man line and signifies a reversal top. If it occurs during a downtrend, it is called a bullish hammer. Okay. A long lower shadow is typically a bullish signal, particularly when it occurs near a low price level, at a support level, or when the security is oversold. And you contrast that with the spinning top, which is a candle with a small real body. Spinning tops identify a session in which there is little price action, as defined by the difference between the open and the close. Now, during a rally or near new highs, a spinning top can be a sign that prices are losing momentum and the bulls may be in trouble. That is what we're saying happened Wednesday, October the 23rd, in the Russell Futures. Okay. Another thing to note is that we have a swing VIX reading now of 37. Swing VIX reading of 37. All right. Got to take that into account as well. With the swing VIX being 37 and the pulse scan being 36, that's a cross downward. Notice how this Kumo cloud is starting to head up too, just like with the S&P, but it doesn't look as strong as the one with the S&P. I would have to say that prices right now are looking attractive toward this, I want to say, 1091 level. All right, that's that's a nice 20-point drop from where we are now. And then the next support from there is going to be 1077. Prices are attracted to the secondary support, and they like to revert back to that mean. So this level here, this range, even though it's wide, we still have to call it 1091 to 1077 is the support zone for the Russell. That's the area we're going to be watching. Okay. So the market, this bull run phase could be in trouble. We could be entering into a consolidation phase, and it does appear that a short-term top has been reached in the stock indexes in the equity market for now. All right, moving on now to gold. As you can see, the top of the Kumo cloud and the bottom of the Kumo cloud are coming together. So it's still undecided which way the gold is going to go, but I am venturing to say right now we cannot lie, even though we're still in the bear right here. All right, still in the bear trend. Technically speaking, we're still locked in on the bullishness. Also, we have these blue candles here, which is a positive swing VIX. Okay, That is a positive pulse scan swing VIX reading. Still have some bullishness in the market, still holding on, locked in, still in a correction phase of this bear market. However, we're technically still inside the cloud, so anything goes. However, I gotta say, it's still looking like prices want to come down here and get to this blue line here. This blue line and this red line here. Alright, let's look at these support levels. The support levels are as follows: 1313 down to 1297. That's your support area. We're going to need to test this area and launch from here if it's going to get if the trend's going to reverse. Right now, I really can't say I see that happening. I'm going to venture and say that the bears are still in control of this market, and they're just waiting to beat this thing down to the dust, because technically speaking, we're at a point now where we're starting to build resistance, and we cannot be ignorant of that fact. Okay, so we're going to need to close outside of the cloud. The trend is still bearish, and it is what it is. Okay, you've come a nice way from this support low down here. Here you are inside of the cloud, hitting the resistance part at the top of the cloud, bumping its head, and I expect it to come back down to at least here, to this blue line here. All right, which is around the 1332 level. Okay. Then the next real test will be, can the support here hold, or is it going to crash right below this 1249? It's a good question. It's a fair question. What are we going to do? We have a very wide price range now that we're trading in the gold. We're trading in between 1331 and 1249. That's quite almost a 100-point range that the gold is trading within. So we're still technically consolidated with bullishness locked in, but this could be nothing more than shorts taking profit, especially people that's been short from up here at the 1413 level. Okay, you got to take that into account. This is a long way to drop over a period of time consistently. Every pop's been sold. This pop was sold. This pop here sold. This pop here sold. This pop here sold. This pop here sold. I'm expecting this one to be sold as well into Thursday and Friday. That's what I'm seeing here, and I would venture the same for the silver. Okay, likewise, here's a chart of the silver. Silver is closer to the top of its Kumo cloud than the gold, and again, you can see it's pretty much the same thing, except for the trend here is more in question. You see this question mark at the bottom right hand of the screen, meaning that we are totally in a neutral zone now in the silver. Have some bullishness still locked in, just like the gold, hence these blue bars here, but still we're closer to hitting between the 2182 and the, actually let's make it 2201 and 2166. That's our level for the silver. And then of course major support down here at 2043. So we're in a $2 trading range in the silver. 2257 top side, 2043 bottom side. Again, undecided where we're going. We could be starting a new bullish trend here. It's just hard to say right now. We need to get outside the Kumo cloud. If we can get outside this Kumo cloud, then technically speaking, you just started a new bull market in silver. So that's pretty exciting. Then we need gold to also do the same thing and close outside of this this Kumo cloud. Once it does, you know, the rule of thumb is prices above a Kumo cloud, bull market. Prices below the Kumo cloud, bear market. It's really just that simple. Can this market get some legs? You see what happened last time. We got above the Kumo cloud, started a bull market, but lost it almost immediately. Look at that. Look how it came down. We spiked up here at the 25.16 level and then just crashed right back down. All the time we're crashing. We're still above the Kumo cloud. Everyone's still hopeful. Every pullback, people were buying it, hoping it would do something, buying it. Nothing came of it. Then they would buy it again, trying to buy it again, trying to buy it again. Nice upsurge here, just when they thought they had things going. Yes, the bull is back. No, it's not. Every pop being sold in the silver. This trend is going to just continue until it no longer does. But for now, this is the game. They pop it up and break it right back down again. What can I say? It is what it is. And finally, our last chart of the day, crude oil. Say hello to the little bear. See the bear right there? Notice how we hit that 96.16 level. I don't think this market is anywhere near done. Remember what I told you? We don't have any more support. We are locked in to this strong bear market in the crude oil. Look at that. Again, like I showed you the other day, as you can see here, we're coming back to this level down here where we hit that 91 level, the 90 level. I think we're coming back down here at least to the 86 level. So I'm holding fast to that. I'm going to actually venture out to say that between that 88 and 86 level, that's where we're headed. This is a very strong bear, and look how we just came out of that. So I think we have a lot more downside to go yet, and this is going to be a fun one to watch. Even the Kumo cloud is not moving. It's just extending itself out this way. It's not even turning down yet. So we still have way more downside to go, in my opinion, in this crude oil. So gas prices should continue to drop at the pump. Easy. Alright, so that's it for now. Remember, take what you can and give nothing back.